All right, let's walk through the top 6 here. We'll start with Apple. We'll go to a daily chart here. So here's Apple on our daily. We see the high volume node we've been supported at, the tertiary 38.2 to 255.36. Also long-term 261.8 here at 257. So nice support here so far, 255, call it 260. So long as that area can sustain, it offers back up into the untested short term at 267.81, and then the high volume node just above that, and the cluster of 61.8s as well from the highs at 271.35. So we would frame that as our area of resistance for now, and this is our area of support. Any failure below the area of support opens into put wall at 250, and then previous support at 243. On to Softy. Softy, let's just go to a weekly first. So we can see Softy tested back into the 76.4 of the secondary. We're still below the primary 23.6, which is a 425, which is an issue. And we're trying to balance out here after we close that gap down here. We can see that gap closure here on the daily all the way back in May of 25. We've closed that gap here now, and price is now trying to set a bottom here, consolidation efforts here, and then the longer term high volume node here on the daily from 408 into 425. So acceptance into this high volume node is basically going to put all these shorts down here at odds, and may force them to close up these positions to force that retest into that 425 as resistance again. We'll want to watch the short-term point of control from the lows up here into the highs. Currently all the way up here at 408.96. We don't really like to see the points of control all the way up top within the profile, so we'll definitely want to see this consolidation hold at that 407.65 range for Microsoft, and then come back up over that short-term point of control to try and force price up here into the high volume node. Failure of 407.65 does offer test back down into the supportive area here that's flagged as pretty much 393 up into 400, where that put wall resides here on Microsoft, and then the aforementioned 74, and then the trailing 61.8 is also there at 394. So decent cluster of supports down here. If we were to lose that, then it would open up range quite a bit lower to 370 and then potentially 345, but for now that seems to be holding steady. Over into Tesla. Let's go Tesla daily. Tesla daily, you can kind of see us sitting on a shelf here at the fourth term 38.2 at 390, the trailing 61.8 here at 394.15. So this is our little supportive box for now. If price is to break below this supportive area, then it offers a wash down here into that 350 range. And any sustain above that box offers retest back there into the 407 resistance, and then the current downtrend as well. So quite a bit of risk still here in Tesla while it remains below that 407, and even more so if we lose 390. On to Amazon here. Alright, we got Amazon. You can see, let's do it on the day weekly. A little bit easier to see that way. There we go. Alright, so here's weekly Amazon. You can see the tertiary 61.8 at 198.52. That was set from the lows here up into the all-time highs here. We bounced off of that at 198.52. That's also the put wall. Almost closed the gap down here in Amazon, not quite. And now we have retested back up into the 38.2 of that drop down range at 270.70. This is also high volume node up here, so this is going to have a bit more supply for price to work through. You can see it even here on the daily, with it defined right there at that retracement to 220.70, and then the point of control up here on the profile, also in range at 222.77. So a lot of resistance or a lot of supply to work through up here on Amazon as well. Have to get a back above 220 to really try to be constructive and push higher. Elsewise, you're looking at retest back into 210 and then 204 as support tests. On Amazon, failure at 198, then opens down into 185 for Amazon. But really, this just looks more like a consolidative effort between 198 and 220 for the time being, to build out a little bit more volume. Google, definitely risk in Google. Let's go ahead and this is daily. It's hard to show daily Google volume profile because it's so stretched out, but we'll do our best here. So we see the high volume node up here from 310 up here into about 320. We have the shorter term 61.8 at 310.80, longer term, fourth term actually at 316.32, acting as resistance, price moving lower. The point of control over the shorter term time period from 17 Feb to current is up or is down at 303.24. So more price action falling off here at the lows than the highs. Failure to recover that point of control or 3015 or 299.80 leads to the washout here into 280, 270, and maybe even down into these 260s. Not really a lot of volume here to work with on the Google chart. And so easy come, easy go, maybe setting up here on failure to recover that 300 to 302 range on Google. Finally, we'll look at NVIDIA. I don't know what else I can say about this stock that I haven't already said about 1,000 times, but it's an inverse head and shoulders as ascending, an ascending head and shoulders. We do have to have bulls need to manage to maintain price back above the 180 range here. High volume node was 176 to 190. The fourth term or fifth term here at 180.28 is holding price. We've already lost the short term at 178.47, and then the neckline is really what's left here. And we've tested it 1, 2, 3, 4, 5, 6, 7 times. So we'll see if we get that additional retest here. A failure for neckline to hold and to recover 180.30 is 168, 164, and 150. Just really no volume in these ranges. Really, you can see the high volume node here at 176, and then there's no volume of like size all the way down here really into 140. So if this does break down, this is a market-wide risk that can really drag things, just given the weighting of the market wrapped around NVIDIA and all of the ETFs and components it's involved in. So I do think this is one to watch. Really, to pull NVIDIA out of risk at this point is going to take up over 189 and then again up over 196. So definitely, I think a little bit more caution warranted here in some of the top weights that we flagged, and that just kind of matches up with sectors and broad market as well. So maybe a little bit more on our toes the coming week.